Hey, what's up guys? Well, it's time to talk trend lines, and I'm here today to help you remove the guesswork of drawing all different types of trend lines to help you pinpoint precision entries, to help you identify trend, to signal a trend reversal. All these items can be really useful in your trading to help you maximize your profits. And today, I want to show you a really powerful tool and provide you guys with the ultimate guide to establishing these high probability trend lines. So let's take a few minutes and break down what it takes to establish high probability trend lines. All right, what's up guys? Time for some trend line talk here today, and we're going to talk about how to establish the highest probability trend lines. And I know that most of you are probably familiar with trend lines and you've probably drawn a few, but what I want to bring clarity to is that trend lines can be very subjective in that you can draw several different lines and really not be sure which one is the right one to trade off of, or what to expect once the line breaks, or how to even approach a trend line that's breaking and what to expect thereafter. So what I'm going to do today is remove that subjectivity so that you know when you're trading off of one of the trend lines that you will be drawing from here on out, you will be able to expect a measurable move, and you can count on that line being very valid if you follow the very simple criteria that I'm going to provide you with here today. All right, so we're going to take a top-down approach and start with looking at the daily chart where we establish all of our major support or resistance, and we're going to work down towards our trading time frame, which can be as fast as 15, 20, 30-second charts to trade momentum. And while trend lines can be used to establish support and resistance, they also can be used to establish precision entry points. They can be established to know when to exit a trade or to stay in a trade. And I'm going to show you several examples of each. But what's most important here today, and what you use through all of that, is how to establish those proper lines and what you're going to utilize in order to create those lines. All right, and just starting off, what is a trend line from a very basic point of view? And a trend line is simply a point of support or resistance that is on an angle. All right, we have support and resistance that most traders are probably familiar with that are on a horizontal basis. All right, so a recent high of something would be resistance. Okay, and that's typically established on a horizontal basis. But a trend line follows a trend, and it establishes support or resistance on an angle. So the only difference is that the support or resistance is on an angle, as you see here, identified by my blue lines, and my trend lines will always be blue. So I know the difference of when I'm looking at a chart. If I'm seeing a red line, I know it's horizontal. If I see a trend line, if I see a blue line, it's going to be a trend line level. Okay, so what we're going to talk about here today is what are we going to use to establish those lines, how do we draw them effectively, best case scenario trend lines, some imperfect trend lines, because sometimes that does happen. Nothing is exact, especially in trading. We're mostly working with a zone, and then obviously how to utilize these lines once they are established. Okay, so again, trend line is simply a point of support or resistance that's on an angle. It's going to establish either an uptrend or a downtrend, which is going to originate with swings in the market. And that's where we're going to start off talking about today, because that's where we have to use to anchor the origination points of the line. So when we're looking at a chart, we need to figure out where the anchor points will be for this trend line that we're going to draw. And the way that you do that is you simply want to look left, right? Look as far left as you possibly can on a chart. You can see the chart that I have up here on the screen. We're looking back nearly 20 years worth of data here to try to find the most significant swings in the market. And the further that you can look back, the more valid your lines will become, in that they have more interactions on them. All right, and what we're looking for here is the most significant swings in the market. So you can see we look back 20 years, we see we have a big swing high in the market back here in early 2000. Right, if we move forward, there's really no other swing point in the market that is established until we get well over here in late 2015. And what I did is I used this anchor point over here, this swing high in the market, and I connected it to this swing high in the market, and I extended that line out to the right. Now, what we want to do is once we extend the line out after we've got our two anchor points in the market is see if there's any more interactions on the line and if that line is being respected, because that's ultimately what we're looking for. Is the line being respected? Okay, and you can see that there definitely is another interaction with this line as we come back into it and test it right here, and we actually reject off of it and pull back. But then shortly thereafter, we push above the line, we start to break out on volume. Okay, that's a confirmation technique that if you start to break out of one of your trend lines and volume comes in, then you know that you are definitely working with a very valid trend line, and you are not the only one that is working with that line that is essentially going to provide you with a very measurable move, a very predictable move. And that's what we're looking for as traders, is obviously predictable moves that create low risk opportunities. And by utilizing these very valid lines, you're going to see many of these opportunities in front of you to take advantage of. So you can see what happens here. We have those two anchor points that we established by using the most major swing points in the market, and thus we've created some descending resistance. All right, descending resistance is going to be high on the left to low on the right. So it's going to be in a descending fashion, and this is what we'd be able to create right here. And you can see once the stock breaks up above that descending resistance or outside of the trend line, look at the type of move that you get. A pretty impressive momentum move to the upside once that line breaks. Okay, so again, all we need to do, guys, is simply identify the most major swings in the market to begin anchoring our trend lines, and that's what's going to give us the most valid points of support and resistance as far as trend lines are concerned. Now, how many touches are you looking for when you're establishing trend line? Well, you obviously need two, right, to establish a line, but I like to see three or more take place in order to fully validate that line and give me some confidence that, okay, we are actually seeing a very well-established trend here, and I can utilize this line to trade off of if we do get an actual break. Okay, and trend lines on the daily are often going to be very well established once you get multiple touches. And this line, obviously, you can see has 1, 2, 3, and then 4 over here before it breaks out, which is the fifth one. That's why this one works so well, because you had multiple touches and they were all major swing points in the market. Okay, so again, very simple and straightforward. We don't have to overcomplicate this as trend lines typically are. All you really need to do is look for the most major swings in the market and start connecting them. And when you start to see some consistency and reactions to the line, then you know that you have a valid line, and the next time the stock interacts with that point, you should see a measurable reaction. And as day traders, we want measurable reactions, all right, because that's where we're able to make our profit from. All right, so if we look at the downside of things, if we look for the most major swings in the market, starting from the left and we look to the right, we can see that obviously, this is kind of a low down here, but if I start with this, and this is going to happen, but you need to just work your way forward until you find those anchor points that you can utilize that are going to give you, validated lines. So if we start down here, we can see that this would be obviously the next swing point, but that's way out of range, so that's not really going to do us provide any value to what we're doing. So we're going to move forward. Obviously, the next most major swing low is going to be down here. All right, so if I utilize this point here, try to make a line that has multiple touches, well, that's probably going to be somewhere in through there. But again, way out of range, not going to provide any value. So what do? We continue to move forward, and you can see that's where I got this third line from, or the next line that I drew, where we started to get some nice touches in through here. We had 1, 2, 3, and this was a big reaction to this line here. You can see the volume that came in when you touch the line. So that's one thing that I want to talk about here for a moment, is that if you have a stock that is coming into a very major trend line that you have drawn off of major anchor points in the market or major swings in the market, and you have a volume reaction to that, you can definitely count on that your line has been just that much further validated in that level is holding. All right. If you see volume come in as the stock approaches a line, then that's going to further validate your line. And that's something that's really important to understand when drawing your lines, because at some points in the market, you may have an anchor point that has really high volume, and that is something you definitely want to incorporate into your trend line analysis. So, for instance, if we had a swing high in the market that had extremely high volume, then we definitely want to incorporate that into your trend line analysis, because that's going to be a very valid point to utilize for an anchor point. All right, and typically what we're looking for on the daily time frame, as you can see here, is some sort of pattern. Right, trend lines will often establish some sort of pattern on the daily that we can trade off of. And in this example, you can see this is essentially just a big wedge that is price is contracting until we actually break through that trend line, and then price expands again. All right, so from a daily standpoint, we're looking more on a pattern-based situation here, where we're utilizing trend lines to, again, establish the trend and figure out where that trend is going to be breaking, to look for a potential entry point that we can dial down to on our fast time frames to ultimately get in the stock for a trade. All right, but again, it's very simple. It's very straightforward. You don't have to overcomplicate it and worry about drawing 20 different lines to figure out which one is the right one. Which point am I using? Which line is going to be the right line? All you have to do is start off by looking left, as you do with any sort of support and resistance, and from there utilize the highest or lowest swing points in the market, and then just work your way back to the right, find those anchor points, and then connect them and look for the consistency in the action. Remember, minimum of 3 touches or more, okay, is what you want to see in order to have a valid line that you can actually trade off of. All right, so minimum of 3 touches or more. All right, so that is looking at it from a daily standpoint, where we find these lines to figure out if a stock is really breaking out of trend, if it's going to provide us a momentum type move because the stock is either breaking down or breaking out. And these provide us with really great trading opportunities because we have such precision in identifying the support and resistance. Now, one thing I do want to touch on here is that don't try to force a trend line. All right, don't try to force a line that's hard to identify. The most obvious is usually the best. Okay, and once you start looking at these charts on a daily basis, this type of stuff will start to just pop out at you without even having to draw a line. But drawing a line makes it that much more clear. So just know that the most obvious points, and that's why we're using the most obvious points, the high swings and the low swings, to establish the lines, are what is going to typically provide you with the best results. Why? Because it's what most others are looking at, including algorithmic systems, automated systems, right? They're going to look for the highest swings and lows, and they're going to utilize those to establish trends or patterns. And once those break, that's when you see the measurable moves take place. So remember, don't overcomplicate it and try to force lines that don't fit, because you just won't get any results after that line has been broken. Okay, so let's dial into a faster time frame to show you guys exactly what we're looking for when we're trying to establish these trend lines. And what I'll refer to the lines as on my faster time frames, refer to them as speed lines, just because they're much faster based lines, and they provide us with entry signals, exit signals, establishing trend. They're used in much more of a day trading sense to help us identify the right points that we want to be working with when entering or exiting a trade. Okay, so one thing to note here right before we get started is that trading is it's definitely not a science. Everything is going to be a zone. You're rarely going to see support or resistance hold to the penny. It happens, but it's very rare. Everything is based much more off of a zone. All right, so don't expect the trend lines to fit absolutely perfectly. As long as you have a zone of support or resistance established in your anchor points, then you can rely on the fact that you have a valid line, right? What you don't want to do is not draw a line because you don't get exact touches on it several times, right? A little bit of leeway here and there is okay. A zone in trading is okay. That's how support and resistance works, okay? So let's look at a stock here that made a hard move to the downside, and show you how we can utilize a speed line in this scenario. So if I look at this stock, what jumps out at me right away is the initial swing high on it, which is at the high. All right. So what I'm going to use is I'm going to utilize that point to start with, and then I'm going to look for the next most major swing, which is going to be right here. Okay, this is the next most major swing. We get a little bit of a retest here after a hard move down, and if I can connect those 2 points and see where we go thereafter, that is the point that I want to use for my trend line. So you can see here that multiple touches on this line. We ride this line really closely all the way down, and then what happens once we break outside or on the other side of the trend line, we start to back test it, and then we move higher. All right, or the current trend or the prevailing trend has been exhausted. You can see here that I'm using somewhat of a zone for the trend line, and as I said earlier, that most of the time trend lines or support and resistance will be a zone, but you want to be as exact as you can, but just understand that a zone is okay to use to establish the line. And remember what we said, 3 touches minimum. Well, we have 1, 2 up here alone, 3, and then several in through here, more in through here. So we got a very valid line here that's establishing a trend to the downside. So being that we would be in this trade to the short side, we would want to know when is the right time to fully exit the trade. All right, and the right time to fully exit this trade is when that trend is broken and we get a pivot or it back test above that line. And you can see here, once it breaks above the speed line, it comes back, it holds a slightly higher low. That's going to be the point in time where I'll be exiting the trade completely if I have anything left. Okay, so again, using the initial swing high and then looking for the next most major swing, which is going to be this one here. We extend that out and we get a really nice line. The stock respects it all the way down until we get the break above. A little bit of a back test with a higher low. That's going to be the exhaustion point of the trend. It's time to exit. Okay, so let's say you're watching this trade and it's starting to sort of kind of consolidate, and you're trying to figure out where's the best entry. Is it up here? Is it back through the low? Is it back below this pivot? Where is the right point to take an entry? Well, you simply just establish a trend line. All right, so you start with the most major swing in the market, as we talked about, which is going to be the low down here, and we establish the next anchor point to the next most major swing, which is, if we look right, it's going to be right here. Okay, so now we've got a little bit of ascending support in the form of a speed line, and that's going to tell us that once that trend breaks, that is going to be a point to where we would want to look to potentially re-add back to the trade and look for a continuation to the downside. All right. Now, one thing that I really like about utilizing these trend lines is if you have a point of support on your chart at the same spot as a trend line, you often get really nice results or very predictable moves. And that's what we have occurring here. Is this white line is a major point of support on the daily, and that's why we kind of stopped around this point and we're kind of chopping sideways. We're holding the support, right? But now the fact that we have that support, it's aligning with our short-term speed line because we used our most major swing point is the low to the next one. We extend it out. So if once we get a third touch on this, we're going to look for a fourth touch and potentially a break. So as we move forward, there's the third touch, right to the line, to the penny, and we start to consolidate a little bit, and then we start breaking both the trend line and the pivot point of support. So look what type of move starts to occur once you break through that point, and look at the volume that comes in. Remember what I said about volume. If volume comes in on the break of your speed line or trend line, you have a very valid line, and you can most likely expect that move to keep continuing in your favor. All right. So as you can see, we broke the speed line again. That's your entry point to re-enter the trade, and from there you just continue to move lower throughout the rest of the day. All right. So a really good example of how to utilize not only a speed line or a trend line to remain in a trade until it's fully exhausted, but also how to enter a trade or re-enter a trade that has potential to continue. Okay, so a good example there of how to use speed lines, how to connect the most major swings in the market to get the most accurate line. Okay, so let's look at another one. Take a look at Twitter. So if we look at Twitter here, we'll see a day that this thing was selling, and we'll talk about a trend line that we used on it. Probably still is drawn, but we can redraw. So if we look at Twitter here, this is a day that the stock was selling, and we wanted to know when this trend was going to be fully exhausted. All right, so here we take a look at the chart, and we look again. Let's say we're trading this in through here, and it's 15 minutes into the open of the day. Now we look for the most major swing. Well, the most major swing to start with is going to be up at the high. All right, we're going to connect that to the next most major swing, which is going to be in through here. The reason I'm using this point right here instead of this point is because I get two touches, right? I get two touches up here, and I get a touch here and a touch here, and then if we extend that out, look what happens. We ride that line all the way down, staying just below it, and then as we start to kind of flatten out here, we start to break back above it, we come back, we back test the line, and we hold. Okay, that's going to tell me if I'm still short this stock, that I will exit my full position because the trend has now been exhausted and we've now shifted direction. And you can see we just start to kind of move back up, sideways, and not really much movement. That was the end of the move. That was the end of the move all the way down to the bottom within a few cents of the low of the day. That trend line gave us the signal to exit the full position of the trade. Okay, so really important how to identify the swing points in the market, because again, those are going to give you the most accurate points to utilize to trade off of. Okay, so again, really good example on how to use a line to keep you in a trade and to tell you when the right point is to exit. Now let's say that you didn't get this move out of the open on Twitter. Okay, let's say you didn't get this move out of the open on Twitter, but you're kind of sitting here waiting to see kind of where the right point is to enter on maybe a retest of VWAP, maybe a retest of the speed line that you have drawn. Well, let's say that you now have your speed line drawn, but you want to know the entry point that where the stock begins to start to break back down. Okay, so you're sitting here, you're waiting through the consolidation, you don't want to get chopped out. Now, again, you use your most major swing in the market, which is going to be down here at the low. Come up to your next most major swing, which is going to be right here. Now you have a speed line established in the form of support. So if that top trend line holds as resistance and you start to break the support, that's your entry, right? That's your entry, a break through the ascending resistance speed line. So we start to consolidate, hit that line again, start to come back through, we break. All right, so now you're short. You don't have to wait till the lows are taken out. You utilize the swings in the market for you to take a trade. All right, and here you can see we start to fade. We get a really nice move down. So these trend lines can be used in so many different situations if you know the right points to be looking at. They can get you into precision entry trades with very low risk. And that you can see right there can be used as an entry if you didn't get the entry out of the open. All right, so a good example there on Twitter. Let's take a look at SPOT, S-P-O-T. Another good example here. We'll talk about some trend lines on this one. You can see that I had it drawn on this trade as well. We'll go ahead and remove that and start over so you can see what how I drew this. Now, when we have a stock that's moving out of the open, what I typically am going to do is going to try to find the most major swing or anchor point in the market. And you can see we had a little bit of a dip here to the downside, and I'm always going to start with that. Always going to start with this here and see if we can identify some sort of trend or some sort of line that gives us multiple touches, well-established price action. But you can see here, I really don't have that. I don't have a situation where I can get multiple touches if I establish a line, right? So what I'm going to do is I started to the left. I'm going to move to the right to the next most major anchor point. And what's that going to do? That's going to start us right here. This is the next most major swing. So I'm going to start from this point, basically the bottom of the pullback. Now I'm going to try to figure out where we can get some sort of price action that it looks like we have a trend. Now, if I do this right here, this looks like we have a trend because we get the pullback, This pullback sells right to the line, another pullback right to the line, almost to the line and through here. A lot of consolidation right at the line here. We're still riding it pretty good, and then we start to break up again. All right, we break up to the upside again. So if we look out to the right, if I'm long this trade, I know where my exit's going to be once this line actually breaks, and potentially even a reversal trade. All right, so if we look at where this line finally breaks, you can see it breaks here, and then it starts to revert back down towards the former support. So we look at what happens, and look what happens once that line breaks. Right, the trend is now over. So if you're long this, you have now exited your position and potentially considering a trade to the short side, which this thing drifts from 141 down to 137. Pretty sizable move. All right, there's something about this trade too that is very important that we talked about on another one that I showed you, is that if you have a pivot that falls roughly at the same point as a trend line, one of your speed lines, for entry point is really valuable. So you can see here that we have a really nice pivot point in that we're holding this support level. We come back, move up, come back again, test, and then we break the speed line, we break the pivot, we start to sell a little bit, come back, we back test, look at that, right to the penny, and we back test that line, and then we start to sell again. Okay, so again, really important. These speed lines are super effective if you are looking and are able to identify the right anchor points of these lines. All right, one last one, Roku. Everyone knows Roku. We'll take a quick look at this to show you an example of how this one was established. So what I'm going to show you on this one is the potential to draw multiple lines and take multiple trades. If you're a fast trader, if you like to trade in and out a lot, there's potential to take multiple different trades in several different situations. But here's an example of a trend that we used on Roku to keep you in the trade if you were to the long side. Now, if you were a fast trader and you really wanted to utilize these speed lines all day long, you definitely could. All right. So, for example, if we start at the opening swing low, all right, we connect it to the next one, to the next most major swing, which is right here. You can see ride that trend, breaks. All right, there's a couple point trade in there. All right, now if you establish a speed line here, all right, down all the way, all these touches, it breaks, there's another couple points back to the upside. All right, you can continue to do this on so many different situations, and I use it on a very short time period like this. If I'm momentum trading out of the open, I will use it to find entries that I would otherwise most likely not see. Right, I would utilize it in many different scenarios to get entries and quick entries. If you have a lot of momentum, you can use these short-term speed lines to really get you in at the precision points. And when you're trading quick moves like this, it's important to have the most precision entry point, because you don't typically have a ton of room to catch a big move. So if you can get those precision entries, that's going to make the whole difference. All right, so again, you can start off the day by drawing very steep speed lines and using them to catch quick trades in both directions. And then once the day starts to play out a little bit, you have a little bit more data, then you can start working with establishing a little bit longer term speed lines. And that's what I did through here. I used this point here and connected it to here. And you can see, look what happens over here. It comes all the way back to this line and test it to the penny and continues to bounce back higher. All right, but so many different situations you can use these speed lines and trend lines. But again, what's most important, guys, is that you utilize the most major swings in the market. Okay, most major swings in the market is what is going to produce all these high probability lines that I just showed you, and that will help you identify the precision entries. It'll signal reversal points. It'll signal exhaustions of trend, and you can be a very, very precise trader. And I would encourage you to try to utilize it on a faster time frame, because you're going to see very accurate data in basically the price action. And price action is king. It will tell you the story. If you can learn to read it and utilize these speed lines while reading it, you have a significant edge, right? And on this trade, you can see, could use these speed lines to get entries all over the place, quick entries all over the place, right? So you can use these all over the place to pinpoint entries left and right. If you're a quick trader, every time one of these speed lines breaks, you're in, right? In. And that's a lot of profit to be had if you can utilize them the right way. So in any event, I wanted to share with you guys just a few minutes today how to establish the highest probability trend lines. Remember, run through the criteria one more time. Remember that you have to have a minimum of 3 touches when you're drawing the longer term lines. You also want to utilize all the price action that you possibly can. Try to utilize the wicks. Remember that it will often be a little bit of a zone. Don't expect it to fit exact every time. Definitely always look left. Make sure you're utilizing the highest and lowest swings in the market, and you will be producing the most probable and highly profitable trend lines. All right, so I hope you guys enjoyed this. If you have any questions or comments, leave them below. I definitely will be happy to answer them and help you understand a little bit more clarity. So everyone, definitely leave a comment below, and happy you guys took some time to watch today. Hey everyone, thanks for watching the videos. I'll continue to make sure that all of the watch lists as well as the recaps are available to all of you. Make sure you subscribe to keep up to date on what's hot and what's not in the market.